Hey traders, Raghee here, and there's a simple question that I'm even looking at today, and that's what I'm going to discuss with y'all today. And that is, which side of this roller coaster are we actually on? Now, when a market does what we've seen through here, when the market does not continue to make higher highs, there's a certain segment of the trading and investing groups, population, that start to feel that, well, the run is done, and either we're going to head lower sharply or we're going to chop around, right? Your momentum crowd is going to lose a lot of conviction, a lot of hope for the upside once that upside stops, because that's actually what fuels the psychology, right? That's pretty simple. But I think we know, as traders who use different levels, whether they be technical, whether they be price-based, whether they be even tendencies, okay? We know that there might be other things to look for in terms of whether or not we continue higher. Now, the way that we have been moving, that's for me still the path of least resistance. The overall move higher is still intact. It's just not moving with the same kind of momentum that it was, but it doesn't mean that positioning ourselves long at the lower end or the bottom of the range still may not work. So then the question becomes, well, what could be those support levels? What could be the bottom of the range? Where could the market decide to stop? Where do the buyers start to step in? So for me, as long as the S&P stays above 3,000, and I know that seems, rock 120 points away, but yes, as long as the S&P more or less can keep some traction around 3,000, I think that we could be going into a little bit of distribution chop, which is easily what you can call this is. If you want, you can call this a little bit of a choppy uptrend, or even just chop. So the lower end of the range is buyable, but the lower end of the range would also be considered perhaps part of a correction, not just an oversold market. The other levels that we could consider would be things like the point of control, which we've stopped at a couple times here. So, even before we get down to levels that people might start to freak out at, either one of these two parts of the range, we haven't even broken the point of control. Now, the point of control, this is the July point of control. This is the level at which so far throughout the month of July, we've seen the most volume, 31.25. Staying above that's pretty key. Staying above the value area low, that's also pretty key, right? This level right here. And so as long as we stay above those, I can hardly call this a downtrend. I can hardly call this a precipice to some major meltdown, because remember, it's amazing how when the market stops making higher highs, the narrative becomes, well, surely now we're gonna tumble. I don't think that's going to be the case at all. The NASDAQ is your relative outperformer. So if you're looking for where there's going to be the most resilience, look no further than the NASDAQ. And I feel the NASDAQ is going to pretty much grab the S&P and take it along for the ride. I would not be as optimistic or as bullish on the Dow, nor would I be on the Russell. So if you're looking for pullbacks to buy, I would focus on the NASDAQ, and then I would focus on the heavily weighted stocks within the NASDAQ. So you can get a little bit more granular about your futures trading and say, well, if I'm trading QQQ or if I'm trading NQ futures, Apple, Microsoft, Amazon, Facebook, Google, Tesla. Let's not forget Tesla is 2 and almost 0.5% of the NASDAQ now. Intel, Nvidia, Netflix, Adobe. There's a lot of names within this that could be considered a part of the NAS. And now how I would play these would be the same way I would play the NASDAQ itself. Wait for the market to pull back and I'll get long. Again, I'm open to doing that on the S&P, but I'm just going to put this out there and you guys think about it for a minute. A lot of folks like the S&P and they think it tracks with the Dow, and that's not entirely incorrect. But if you take a look at the weighting of the S&P futures or even the SPY ETF, you'll notice it has a whole lot more in common with the NASDAQ than it does with the Dow. And that most of the time, again, from a probability standpoint, not from a this always happens, because nothing always happens, But from a standpoint of probability, normally the NASDAQ is going to pretty much dictate where the S&P goes, because when you look at the S&P, your top 5 names look just like the NAS. And when I say the top 5 names, let's call Goog and Google Alphabet one name, right? Microsoft, Apple, you've got about almost 12% of the S&P. You add in Amazon, you've got almost 17%. You add in Facebook and Alphabet, you're right around 21%, just over 21%. You add Goog and Google, now you're about 23%. And so by the time you get through the names that are heavily weighted within the NASDAQ, you're talking about almost a quarter of the weighting of the S&P. So yes, the S&P is going to by and large move with the NAS. So think about that. Think about the components. And then, we're going to talk a little bit more in the premium video about the individual sectors, and then break this down one more time, because as a futures index trader, I'm going to be looking at the NASDAQ mostly, followed by the S&P. But then I'm going to look at things like XLY, XLC, right? We're going to look at some of the heavily weighted sectors within the NASDAQ and some of the stocks within those sectors, because they are basically going to be behaving like the NASDAQ. And as we go into earnings, this gets even more interesting. So we'll talk about that, earnings, the sectors, and the premium video. But start to think about these facets of being a futures trader, an index futures trader, and what that can mean to sort of opening up past just sort of a futures trade, but then getting below that futures, initial market, and look at what's inside the contract. And it will open up a lot more opportunity and possibility. I'll see you in the next update.